Just looking at the guidance that you've given today in terms of increasing the dividend payout, the 5% growth in operating EPS from 2018. Just update us on what's changed since November. You had a Capital Markets Day, I think, back in November. Has anything changed since then, or is it's steady as she goes since then?
Well, morning, Anna. Yeah, a few things have changed. I think the growth continued, and it continued a little bit stronger than we were all expecting. The UK was particularly strong, so I guess all the doom and gloom of Brexit maybe didn't impact us too much, as that business was up about 13% and life sales up 23%. But the growth is broad-based. It's gone pretty much across 6 of our 8 markets, of our 8 biggest markets, had double-digit growth. That sort of contributed to EPS being up 7. We generated a whole lot of capital on top of that, and now we have this high-quality problem of having to deploy about $2 billion of it.
It's a nice problem to have, Mark. A very good morning. How to deploy it. So can we move on from bolt-on acquisitions? I mean, you've reaffirmed the 55% payout target by 2020. You've got a lovely problem. How are you going to solve it?
Yeah, well, it's a good question, one we're working pretty hard on. So, yeah, what we've said, by the way, is we've said dividends don't come out of that cash pile. Dividends come out of earnings, and that's why you saw that go up 18%. The $2 billion, I'm being quite clear today what we're using it for. So $900 million is going on to paying down some pretty expensive debt. That's first. We're going to put about another $500 million into giving that back to shareholders this year, and about $600 million we'll spend on bolt-on acquisitions. You know, acquisitions seem to be the flavour of the month at the moment in the insurance world, and we'll try and deploy about $600 on that.
So that's acquisitions and paying down debt. You mentioned to me just earlier, Mark, that the UK had been better than you'd expected. What do you attribute that to? What is it in the UK that's doing well for you?
Well, there's a few things. Firstly, we've got a composite business, which means you do life in general and funds management and health. And we were able to pull it all together in one business, and we're able to cross-sell much more effectively, particularly in the consumer market. Our digital business has gone extraordinarily well. For the first time, we exceeded £1 billion of premium, so that's a pretty nice milestone. But maybe in all the uncertainty over Brexit, maybe there was a flight to quality, and obviously we have one of the biggest brands here, and I think there's a flight to the big brands, and we look like we've been a pretty big beneficiary of that.
Mark, you mentioned there the M&A story. You're right. I mean, if you look at the latest flurry of deals, you got AXA XL on transatlantic, AIG going after Valdez and Phoenix and Aberdeen's Standard Aberdeen. Are valuations rising? Are we now entering into perhaps a little bit of a giddy valuation period in your world? Is it getting harder to find those bolt-ons at good prices?
Well, you know, Manus, the key thing for me is, although we have a large pile of cash, it certainly isn't burning a hole in my pocket. And if you can't find the acquisitions at the right size, I'll give more back to shareholders. I don't chase deals like that. That's not our style. Valuations are different in different parts of the world. If you have a look, for example, on valuations on financials in the UK, they're certainly still lagging the rest of the world at the moment. You can find it. We did one in Ireland just before Christmas. That was a pretty attractive valuation. We're looking at a few more bolt-ons now at pretty good valuations, but let's see. If the valuations get too high, there's always a word I can say, and that's no.
That's the word you can use. You've said this morning then, Mark, that you plan to exit some markets or product segments. We've talked to you in the past about the reshaping that you've been doing of the business. So where will those efforts, those exits, where will they focus?
Well, I guess the good point today is I'm finished with that. We've, for the last, really, I guess, 4 years, have been shrinking our perimeter. I only want companies that can grow. We just finished another acquisition in Spain. You know, we just closed Taiwan and others that we didn't want. And so we've sold the ones we don't want. Our perimeter is what I want. These are the businesses that can grow. You've seen that in the results today. And I think you'll see some pretty good EPS growth from now on. And then we can deploy some capital on top. So, no, I'm finished with the disposals.
Mark, I was chatting to the team before we came to air and said we're going to have this conversation, and I'm looking at FA on the Bloomberg. UK, France, Europe, and then Canada comes in here. How's the Canadian business doing?
Well, Well, it wasn't all good news, and the one dark spot in our results is certainly Canada. And Canada was down about £220 million. That's 83% down. And there was a lot of weather-related claims, frequency. There was a whole lot of geographic issues where we were concentrated. It wasn't a great year, and we've got in place, I think, about a 26-point plan to fix it. But, you know, even with that, I guess that's one of the benefits of us as a group. We've got enough diversity that we can overcome a bad result in one market and still get 7% EPS growth. And so that's what we've done. So Canada will have a bit of a bounce back later this year and next year. And I guess that gives us a bit of a tailwind for some increases in earnings as well this year and next.